Hope everyone's doing well. Certainly know it's a challenging time right now, but perhaps a good time to do a webinar. So we'll explain E&O insurance from a film producer's perspective in this webinar. And just to give an overview of Front Row, we provide insurance and risk management consulting services for the entertainment industry. We operate out of 7 offices across Canada and the US. Our senior account executives have 20+ years of experience providing expertise wherever and whenever needed. Front Row specializes in providing insurance solutions for a number of sectors, including the ones that you see here. Of course, film and television would be the primary one, but we also do a lot of work with musicians and in live theater and in some other areas as well. So I'm Grant Patton, VP of Marketing here at Front Row, and I'll be your moderator today. I have about 8 years experience in the insurance industry now. Worked previously at CSIO, which is an insurance industry member association, in a marketing role, and I joined Front Row last year. I'm a graduate of Ryerson and U of T. Damian Schleifer, Executive VP at Front Row, specializes in developing insurance products and finding solutions for entertainment-related industries. Experiences include risk management consulting to film and television production companies, including animation and commercial production. Damian holds his BA from York University, his MA from Wilfrid Laurier University, and his CIP Chartered Insurance Professional certification. With over 20 years of experience providing a wide range of insurance solutions, Damian is a reliable, knowledgeable professional who crafts together the best possible coverage. Diane Konecny, Executive VP and the Toronto branch manager at Front Row, began her insurance career working in claims and then moved over to being a broker in '94. At that time, she was doing commercial insurance for several large insurance brokers. In '99, she began working for Jones Brown, focusing on insurance for the entertainment industry. Diane had a passion for the industry and had studied film and television in school. Diane moved over to Front Row when the entertainment division from Jones Brown joined with Focus Insurance. She continues to focus on providing policies for large and small productions and any entertainment-related industries. So here is an overview of the structure of today's webinar. And we'll, first of all, explain what we're talking about when we say E&O insurance. We'll talk about the different types of E&O. We'll talk about rating factors and costs. We'll talk about some of the specific insurance companies offering E&O certificates and exclusions we'll discuss. We'll talk about how to get a quote. And we'll also mention our E&O insurance ebook that we have available for free on the website. There will be time for questions at the end of the webinar. So the information provided in this webinar is to be used as a general reference only and is not intended as advice for any particular situation. In all cases, actual coverage is subject to policy language, terms and conditions of the long-form policy documents issued by the insurance companies. And so with that, I will go ahead and let Damian and Diane take over. Damian, I will go ahead and give you control of the keyboard and mouse right now. You should be able to toggle through the presentation now.
Okay. Sorry, just getting the slides set up in the right order here. Producers' errors and omissions is a tricky type of insurance policy for many producers to understand. We're really used to seeing insurance that covers loss or damage to tangible property, whether that's equipment, footage, set. But when it comes to producers' errors and omissions, we're really talking about coverage for the content itself that's created and disseminated. So the insurance is a lot more abstract, and with a lot of questions from producers asking, you know, what are the chances of what are the chances that I can actually see a claim? You know, I have all of the rights, releases, permissions, or it's an original concept, it's my concept, I've come up with it, and are often surprised about the process of obtaining errors and omissions insurance and all about the cost. So the coverage is very intended to deal with claims that are very significant in size. We tend to see not a lot of claims, but they do get quite big when they do occur, and a lot of it can be the cost to pay for a legal defense with your lawyer. So the scope of coverage under E&O policy is really outlined by the insuring agreement, which specifies the claims that are covered, and then the policy exclusions and conditions. So we'll talk a little bit about the types of claims that are covered, and then we'll deal with the exclusions later on in the presentation. So typically, a producer's E&O policy will cover the following types of claims that you see on the slide. So we'd be looking at invasion or infringement of the right of privacy or publicity, infringement of copyright or trademark. So, you know, could someone else have rights to content that's appearing in your production, or you can see allegations that the images, concepts, characters that you're using, someone else might claim to have ownership of those rights. If you're using a logo in a production or depicting it, even in the background, that could be infringing someone's trademark if you don't have permission to use that, or if it's not in the right context. Libel, slander, other forms of defamation. We often see claims for unfair competition resulting from the use of titles, formats, ideas, plots, performance of artists or performers. And then there's certain coverage available for breach of contract resulting from the alleged submission or acquisition or use of a program, music contained in the production. The legal expenses are, as I mentioned before, often the largest part of an E&O claim, and shouldn't be underestimated. They do add up very quickly.
Hi everyone. So what I'm going to go through is the common types of E&O policies. Sorry, Damian, was that? Sorry, we're doing this remotely, obviously, so we're all in different places. So the common types of policies that we have are the producer's errors and omissions liability policy, which typically are purchased on a one-off production, be it a documentary or a feature film or television series. Distributors' errors and omissions policies, which are typically purchased by a distributor, so it can cover their entire library and any future acquisitions that they have. Broadcasters also have their own E&O policy, just to cover off the dissemination of the content on their television or radio stations. And then a lot more people are looking at multimedia liability insurance policies. You can purchase this for your own library of productions, and therefore reducing the length of the term that an individual producer's errors and omissions liability policy would need to be purchased for. And also broadcasters and any other, internet or like distribution or books or magazines, publishers, any of the things that are outlined on the slide, it can also cover those things. One of the things that has been changing over the recent years is the types of policies that a broadcaster or a funder might require, be it a claims made or an occurrence or the liability limits. So when buying a multimedia liability policy, if you're looking at doing that in the future, or if you have one now, it just needs to take into account that there might be different limits or even currencies that are required to cover new productions that are being sold, or even old productions that are being sold or distributed. So it's something that should be reviewed in contracts, just to make sure that the multimedia policy would cover off those requirements as well.
Thanks, Anne. And there are two types of policies. There's a claims made policy and an occurrence-based policy. Claims made policy tends to be the standard in Canada. We're seeing more and more occurrence-based policies, but this is usually for productions that have a U.S. broadcast sale. In the U.S., occurrence-based policies have become more popular and are probably the most common type of E&O policy. Each has their own benefits and drawbacks. So a claims made policy responds to any claim that's made and reported during the policy period. So if an infringement or an alleged infringement took place prior to the policy being purchased, this type of policy can still respond to a claim, because the trigger has to be when you first become aware of the claim, you make and report it to the insurance company. This has the advantage of providing coverage prior to inception. So if there was an allegation that you infringed on someone's copyright, someone maybe had a discussion with you and pitched a concept for the project, and or make that claim, and whether it happened or not, or you disputed it, and if they make a claim against you, provided the policy is in place, this policy will respond, even if that incident took place some years prior. And an occurrence-based policy, there's no coverage that takes place for any occurrences or incidents prior to your purchase of the policy. So the benefit of an occurrence-based policy, though, is after the policy expires, provided the claim that comes against you relates to an occurrence that happened when a policy was still in force, the occurrence policy will respond, even if this is a few years into the future or down the road. So it has the benefit of having a longer tail coverage on the back end, and the claims made policy is almost the opposite. So it doesn't have that long tail coverage, but it has much better coverage for prior incidents. The only thing to be cautious of with a claims made policy, and this is less common in Canada, but in other jurisdictions, sometimes it'll have a retroactive date, meaning that claims made, it has that feature covered prior to the inception date. If there's a retroactive date, it will dictate that there are no claims covered prior to that retroactive date. So each has its pros and its cons. So if there are any questions or concerns, we encourage producers to talk to us or talk to their broker just to determine which is better for them. Often it's a contractual requirement that you might have the distributor broadcaster that's asking for a particular type of policy. Occurrence policies can be endorsed to add higher coverage onto them, but the definition of occurrence is very important, because sometimes with some insurers that's very limited. Others have a very broad definition of occurrence. Claims made sort of avoids that issue of defining the occurrence. It's not as specific. So again, another pro and con for each. And as I said before, in Canada, claims made is the predominant or standard type of E&O policy.
Just one thing I might add to what Damian said is just we get a lot of questions on pricing. And typically, because a claims made policy has kind of a finite period of time where coverage is in place, they typically are less expensive than an occurrence-based policy, because an occurrence-based policy is open for a longer period of time as long as the occurrence happened. So if you're getting quotes on both, you'll see that the occurrence-based policies are typically more expensive. So now I'm going to go on and talk a little bit about the annual producer's blanket policy. It provides coverage for it's a corporate, more of a corporate policy, and it provides blanket E&O policy or coverage similar to the coverage provided on the standalone policies that you'd buy for a documentary TV series or a feature film. Usually these are purchased by larger production companies or distributors or broadcasters who have a library of productions, and whereas the producer's errors and omissions policy is purchased for a specific production or title. Some of the advantages to carrying the annual policy: it allows the company to cover their own productions and distribute their own library of titles. It can provide a cost savings for the company because it's based on revenue from the library of productions as opposed to buying one policy for a longer period of time based on the broadcaster or funder's requirements. It can cover past titles. So again, if you have an old title that for some reason someone wants to purchase, then it would automatically have coverage for that. And it allows or it can be amended to allow a company to acquire titles from other producers as well. And in some cases, it can also cover, development of a new production when you haven't purchased the E&O on that production yet, or it hasn't gone into full production yet. Again, as I mentioned before, these are the things that you want to look for is the policies bought on a yearly basis. And again, different broadcasters and funders look for different limits or different currencies. So the annual policy would need to be have limits large enough, or even the correct currency, be it Canadian, Canadian or US, to cover requirements from all the different broadcasters or funders.
Right. So a lot of people ask, why does the producer's E&O policy cost what it costs? Isn't there just a standard cost per production? Why is there variation? Some producers will say, well, the last time I insured something was roughly similar budget, but the premium was different. Why was it different? Well, there are a lot of factors that go into the cost. So this is a fairly detailed list of some of those criteria that go into the pricing of E&O insurance. So the limits purchased can be, a big differentiator. So the minimum limits typically are $1 million per claim, $3 million aggregate, but higher limits can be purchased. We've seen some broadcasters or distributors even ask for limits up to $10 million per claim, $10 million aggregate. So that's a bit the higher end, certainly a bit unusual. The higher the limits, the cost do increase dramatically. Also, a deductible can sometimes have an effect on the premium. Sometimes, if you're just asking for higher limits, an insurer will not offer a lower deductible. So the minimum deductible we see is $10,000. Deductibles can go up much higher, but you need to be careful because most broadcasters, distributors will insist that the maximum deductible be $25,000. Some still ask for a $10,000 deductible. So that's another factor that can have an influence on cost is the deductible, how much the producer has to pay out of pocket. The length of the policy term is another factor. So obviously, the longer the policy term, the more expensive the insurance would be. So it used to be that most broadcasters, distributors would accept a 3-year policy. That was sort of the standard. With television, that's been pushed out a lot longer, and because projects can have a longer life with second windows and playing in subsequent years. So 5 years, 6, 8 years, is not unusual to see from a broadcaster. On the feature film side, 3 years is still pretty much the standard amount, but again, it can vary based on the agreement that the producer might have. Type of production is also very important, whether it's a feature film, TV series, documentary, docudrama. These all have different risk profiles or characteristics and can be priced and the cost quite differently. Even if the budget is similar, all other limits, term, everything, the type of production is very important. The country of origin writers and also owners of underlying rights can be a big factor as well. It's less common, but for a number of years, any project of a U.S. writer or where the underlying rights was a U.S. citizen, the cost of insurance was more expensive. And this is mainly because in the U.S., it's a lot more litigious, so the legal environment was more risky from an insurance standpoint in defending claims. If the chain of title is simple or complex, that can also have an impact on the cost. Also, the quality of the producer's clearance routines. So it's very important to have an experienced entertainment lawyer that can identify issues that can be made before a picture is finalized and the picture is locked. If there are rights that need to be obtained that haven't been obtained, a lawyer can identify that and work with some creative ways of getting around certain difficult situations. So if there's any problems where a release wasn't obtained, you can get coverage sometimes depending on the scenario, but this can mean that the producer has to pay a significantly higher premium because the insurer is accepting the risk, or the insurer might insist on having a higher deductible or a specific exclusion to remove coverage for certain types of claims. From prior claims history is also important. So if a producer has a history of having a number of types of claims on a certain type of production, the insurance company might still look at the merits of this specific project, be willing to provide coverage, but there could be a loading in terms of the rate and the cost that they charge for the coverage. Also, if it's a production that's fact-based or controversial in any way, that can usually be a more expensive production to cover. So if it's a simple documentary of positive life and times of someone who's participating more in first production, that's a little bit different, that's lower risk. But if it's based on the life and times of somebody and it's not, rights haven't been obtained either from the individual, or if a family member has rights to their story, that can obviously create a higher risk for insurers and more expensive premium for the producer. A number of insurance companies do use a legal clearance process. So this has a lot of pros and cons to it as well. Sometimes it can be a little bit more expensive, especially if it's a difficult production, but it's very good at the same time if it's a difficult production, because this legal clearance process involves the lawyer for the producer speaking with the lawyer for the insurance company. And so they can review the clearance routines used, identify any issues, and even though it's a lawyer representing the insurer and a lawyer representing the producer, often they can put their heads together and come up with a very creative solution and find proper coverage for a client.
All right, so now we're going to talk about some additional costs that a producer might have to, or would probably have to incur when clearing their E&O. So the producer has to obviously have a lawyer involved to look through the applications, to potentially go through the E&O clearance with the insurance company's lawyer. So those charges are incurred by the producer themselves. If there is title clearance required, or script clearance, copyright, trademark clearances, any of those again have to be incurred by the producer. Those things are then, well, the title clearance is submitted to us so that we can actually get title cleared on the E&O, as it's usually a requirement by funders and broadcasters. And the script clearance, copyright, trademark clearance reports, those are all the questions asked on an E&O applications to see if they've been obtained and been reviewed. And then there's the cost for underlying rights, which again are incurred by the producer themselves. A lot of times we get questions whether there's an additional cost to add people onto the policy as additional insureds. So that's for the certificates that we issue to any broadcasters or funders. And there's no cost to include any of those regular people like the distributors or broadcasters or financiers. However, if there is a writer or musicians or any other people that are providing creative content to the actual production themselves, if they are required to be added as an additional insured to the E&O policy, then it's something we typically need to get approved by the insurer, and it will depend on what their role is and how they're hired for the production. And in some cases, there is an additional cost to add those people on if the insurance company agrees to it.
Some of the insurance companies that offer producers E&O coverage in Canada are listed below. It's Lloyd's of London. There's Beasley Canada, which is actually a syndicate based in London as well. They do operate in Canada and have an office here with Canadian staff. Chubb Insurance Company of Canada, Travelers Insurance Company of Canada, Allianz Global Risks, that's via Real Media. So Real Media, a specialty company that does underwriting for Allianz. And there's Access Reinsurance Company and Intact Insurance Company. So most of them offer comparable policies. There's not a lot of variance between the different companies because it's a very specific product. Some do require legal clearance though, meaning a review with their lawyer and a producer's lawyer, and there are a few companies that do not. So Access, Beasley, and Chubb do not require legal clearance. It doesn't mean that they're easier to get coverage from. It just means that they use their own in-house lawyers or trained underwriters to review and look at a risk before pricing it and agreeing to accept it. When clearance isn't involved, it's really important that an insurance application be completed as accurately, as detailed as possible, because in the event of a claim, the insurance company will look at those representations and statements made by the producer on the application. So it's important as well that there's legal clearance, but at least with insurers, when there's legal clearance, insurance company has an expert lawyer who's reviewing sort of firsthand with the producer's lawyer. So if there's a question that looks kind of funny, the lawyers can hash it out, and the insurance company's lawyer will note, you know, that they've reviewed this question, they've got additional information about it, and it satisfied the insurance company's file. When there's no legal clearance, it really is you know, just relying on that application, so it needs to be really accurately completed.
Okay, so now we're going to go through the different types of dissemination. So the producer's errors and omissions policy traditionally covers television and feature films for theatrical release, exhibition or broadcast. And you know, there are so many different changes that have gone on in terms of streaming services, online, YouTube, all those things. So the production policies have actually adjusted to incorporate things that are also for those other dissemination stations or whatever you want to call them. Anyways, the coverage can extend to home video, DVD release, internet streaming, unless there's something specific on a policy amendment or endorsement. For example, there could be an exclusion if something hasn't, if someone hasn't obtained rights for a certain dissemination of a production. And one thing to remember is coverage is only provided for the content or material that form part of the original production. So if there is additional content that is used as bonus material on the internet, or if the footage is modified or even changed by a distributor or anything for promotional, those things are not automatically covered. And typically when you have an E&O application, there is a supplemental application that is also provided where you can outline these different things that are being added or included as part of production, or any other digital media components, be it games or apps or anything like that, that are included along with the production. So those need to be cleared in addition to the actual production itself.
Yeah, so picking up from what Diane was saying, the supplemental application is for what we call companion materials, and producers' E&O policies are very flexible, so they can be used to add video games, social media campaigns, interactive websites, online games, DVD bonus footage, what we used to call DVD bonus footage. So making of documentaries, behind the scenes, press kits, soundtracks, merchandise. So a lot of kids shows, animation. We'll get clothing, toys, books, comics, can all be added to the producer's E&O. We also insure podcasts under a producer's E&O policy. There are some producers that will either have podcasts related to a film or TV production or a standalone project. So as I was mentioning, producers' E&O policies have come a long way just from theatrical release or television broadcast to try and encompass all sorts of different ways that people disseminate content. Companion materials like the original production are often subject to legal clearance. It might be sometimes a little bit less detailed or intense in terms of clearing companion material. Sometimes it's even more so. It just depends on the project and the type of companion material. But often the lawyers can review the scope of the companion material. Sometimes the revenue is important for soundtracks, merchandise, books in particular. You will be selling making sales from some of that material. What sort of risk does that present to you as the producer and to the insurance company? So those are things that are taken into, and sometimes additional premium is required for some of these companion materials.
So as I mentioned, there's certificates of insurance that are required by funders and broadcasters. And what this does is that this proves to the individual companies that you have the E&O insurance in place, and then it'll protect them for things that they might be brought into a lawsuit on based on the coverages under an E&O policy. So what we include in the certificate of insurance is the full legal name of the company that you're adding as an additional insured, and sorry, your legal name rather, and the address of the production company, the name and address of the additional insured, again, be it a broadcaster, distributor, financer, or any other party that is looking for the E&O coverage. It'll include the insurance company's name and policy number, the type of insurance, and again, in this case, it would be the E&O policy, the term of coverage. So it would be for the E&O policy, for the claims made policies, the insurance companies can write up to 8 years of coverage at any one time. And typically for an occurrence-based policy, the insurance companies will write a 3-year term, but shorter terms can be purchased as well. And then it'll show the limit of liability, so the policy limits and the deductible, because again, these are things that the funders are looking for. And then there's a clause that is usually, that will be included that says that it's adding the insured or the additional insured party, or in our case, we have issue 2 as an additional insured to the policy. If there are special requirements by broadcasters or funders or anything like that, sometimes they'll ask saying that the policy is primary and non-contributory to, and it'll ask for a 30-day written notice of cancellation. So things like that, which are standard requirement or standard requirements from funders, we will also include. If there are any other special requirements that any of these parties might have, we can look at adding those to an E&O certificate just to show that those are actually included. There are some things that some of these parties will ask for that can't be done, such as adding, other parties as an additional insured. So they might ask for attorneys and different other parties in their wording. So some of that needs to be approved by insurance companies, and other things insurance companies agree that they can't include those parties on. So if there are any additional requirements, please forward them to us, and then we can take a look at it and create either the correct certificate for you, or else check with the insurance company to see if those different terms or conditions can be added on.
I'm just going to talk a little bit about standard policy exclusions under a producer's E&O policy. We often get questions about what's the difference between a standard exclusion and a non-standard exclusion. So I'll talk a little bit about the standard exclusions, and I believe Diane will talk a bit about the non-standard one. Each insurance policy is its own sort of specific contract, and each insurer has a list of exclusions that restrict or curtail the coverage provided by the policy. And for the most part, they're very similar, but some companies might have extra exclusions. Some of them might vary a little bit. For example, some insurance companies might exclude pollution or nuclear incidents, and you think, well, what does that have to do with a producer's E&O policy? And it really doesn't, but it's a condition that their own insurers impose upon them. So often insurance companies will purchase insurance themselves from a reinsurance company, and it's just a way of sharing risk. So if there's $1 million claim, the insurance company doesn't take all of that loss themselves. It will divide it out amongst other companies. So you get quite a collection of some interesting exclusions sometimes on a policy, and that's the reason for some of them. Things to watch out for are certainly the non-standard ones, but common things that almost every insurer will have that producers should be aware of. It may or may not apply to them, but are important to note would be patent infringement exclusions. So if you're, especially if you're doing something in the digital space and you're infringing on a software patent, there's no coverage under a producer's E&O policy for that. Similarly, for bodily injury or property damage to third parties, an E&O policy is not intended to cover that type of exposure. It's covering the content of something you're disseminating, whereas if you do something that causes an injury or property to someone else, there's other types of insurance usually available for that.
So quite honestly, I'm not sure where Damian was going, but I'll just say some of the, Damian was saying, some of the claims arising from bodily injury or property damage wouldn't be covered. There are some policies that this can be added back on for. If there's a TV series that's instructional, then sometimes the insurance companies will look to add this back on. Typically, those things are covered under a commercial general liability policy. So again, criminal acts, intentional false advertising, promotion, disputes. As Grant had said, you can download a copy of the slides so you can see the rest of the things in that last paragraph that were included. So non-standard policy exclusions, which are things that most funders and broadcasters won't accept for their full clearance. And I'm sure some of you have had some of these added onto a policy. Typically, these happen if an E&O policy is at the beginning of production. So you're just starting a principal or even in development. So a lot of these things haven't been obtained. So some samples of non-standard would be a rough cut exclusion. A lot of times these will happen on documentaries or any fact-based productions because the lawyers want to review the rough cut to make sure that all the clearances have been obtained and that there's nothing defamatory or controversial in the actual production itself. Once the lawyer, either the production company's lawyer or the insurer's lawyer, has reviewed the rough cut, then they'll either make suggestions if there's changes that need to be made before the fine cut, or else they'll remove the exclusion. As a non-standard exclusion, again, if music rights haven't been obtained, to remove a music exclusion, it's really simple. You just send whoever's dealing with your E&O coverage an email or a letter stating that all music rights have been obtained. We forward that onto the insurance company and they will remove the exclusion. If there is, a individual or corporation that might have made some comments with regards to a production or how, or in relation to the content of a production, that they're unhappy, then there could be claims, or sorry, exclusions with regards to that specific individual or corporation. Sometimes these can be removed if there is some kind of settlement or discussion with those individuals and there's some agreement made. But in some cases, that's not possible depending on the content. So there is, there can be an exclusion left on for those sorts of things. There can be exclusions or limitations on the ability to publicize the production. Again, these usually come up in more controversial situations. Same with exhibiting it in certain countries or territories. Again, if it's sensitive in some areas, then there might be a restriction. That's not one we see a lot. Typically, the policies are on a worldwide basis, but again, in certain situations, this may occur. Exclusions applicable to dialogue or scripts. I talked about music, and then the failure to obtain rights or releases exclusion. So again, this could be if certain rights or releases haven't been obtained, then the insurance company will put an exclusion on the policy. In some instances where there is an exclusion because of controversial nature, and if a broadcaster or funder can't accept that exclusion, sometimes we do have the ability to go to another market to look at buying out certain exclusions. Obviously, there's a cost to it. Sometimes it's quite significant, or there's increased deductibles, which again, not all broadcasters and funders would agree to. So if there is a case where if there is something that is potentially controversial, or if there's any issues with, then typically it's best to start the E&O process early, so that these things can be figured out before there's a tight deadline to get E&O in place, that different options can be looked at.
It's okay. I think I can take it from here for the rest of the of the webinar. So if people would like to go ahead and get an E&O insurance quote, this is where you find it, frontrowinsurance.com. If you hover over the all sectors in the navigation menu, you'll see it there under film, and you can just fill out the form there, and we will get back to you quickly. We also have this here free ebook about film producers E&O insurance available on our site at the URL you see on this slide, and you can also click the URL from the PDF. The ebook overlaps with some of the content covered in this webinar, but it also includes a lot of information that we weren't able to get to in this webinar today, such as distributors E&O, copyright reports, title reports, fair use, and so on. So this would certainly be worth the download. Yeah, so we do have some time for questions now. If you do have any questions, you can go ahead and type them into the questions panel. So we see that we do have a question here from Kathy. Diane, if you could answer this. Since broadcasters are asking for longer and longer terms of E&O for their long licenses, might it not be less expensive now to get the occurrence-based than claims-based?
It can, so it depends. So the occurrence-based policy, as we mentioned, is typically more expensive, and it's for, typically just for the 3-year term. One of the things that, is kind of a detriment of an occurrence-based policy is after that 3-year term, if you make a sale, let's say from your library, 5 years down the road, then that occurrence-based policy isn't in place anymore. So a new policy would need to be purchased unless you had one of the multimedia or distributors policies. So it kind of depends on the situation. If you're buying an 8-year E&O policy on a claims made basis, then the policy would be in place for that length of time and then could be extended. And typically the cost to extend an E&O policy, depending on the nature of the production itself, again, being a documentary or a feature film, usually ranges, $500 to $1,000 per year, again, depending on the limits, but there's kind of not a right answer just based on the situation, but you know, the occurrence base is better if you have sales within that first 3 years of coverage. I hope that answers it. And I just want to apologize because I know we had some audio issues. Damian, at least to me, I could hear Damian cutting in and out. So this is our first all 3 home-based productions. So we're learning as we go. So we apologize for that. And hopefully our next one will be without any issues.
Mm-hmm. All right, so we do have another question from Andrew. I've heard from indie filmmakers that they did not get E&O insurance until after they make a sale. Can you speak to this? And if there are any differences compared to buying before going into production with regard to indie feature films?
We see a lot of independent producers, independent film producers, typically buying it when they've made the sale, obviously for cost reasons. So there's really no difference in buying it before or after if you're getting a claims made policy. The only thing that if you're buying it earlier on in the production, then you're having to buy a longer term, so the cost would be more if you're needing an additional year, depending on how long your production goes for and what your term is for the distributor or broadcaster that's made the purchase from you. So there would be a bit of a cost issue or an additional cost to it. The other thing that you might find is we do get claims from individuals, or typically it's coming from individuals when a production is either in pre-production or actually filming. There have been instances that have come up where someone, potentially a writer, will claim that it was their idea and they heard that you're producing it, and there could be validity to it, or or not. So there are instances that if you don't have the in place when you're even in pre-production, that there could be something that comes up, and then you would either not have a policy in place, and then when you do put a policy in place, there would typically be an exclusion based on that person already making a allegation of stealing the content or stealing the idea. So it's understandable when you have no funding that you're not purchasing an policy, because it can be an expensive policy, but there are risks associated with not doing that as well.
Mm-hmm. Okay, something from Brian here. He's wondering about COVID-19 in terms of E&O. Do you anticipate the pandemic impacting premiums? And in terms of CGL policies, how do you anticipate insurers responding to claims for delay loss due to COVID?
I mean, this is obviously a big question that everybody has right now. In terms of E&O policies, there is no specific exclusion on it. Not to say that there won't be in the future, as Damian mentioned, with the exclusions, such as the nuclear exclusion or anything like that. There could be some reason that something comes up in all of this that might affect an E&O policy. I'm not quite sure how, but things are changing so much on a daily basis. So again, on the E&O, I don't see any exclusions being added at this point. On the production policies, all the insurers have added exclusions either for COVID-19 or for a broader exclusion for communicable disease. Now, these have all been added within the last, pretty much the last week or so. And one insurer was adding them earlier when, things were getting more serious outside of North America. But now we're seeing, all of the insurers worldwide adding an exclusion. Obviously this has hit everybody in every filming community around the world. And, the insurers that write entertainment insurance in Canada typically are the ones that are writing it in all the other countries where, film production is done. So they have changed over the last few weeks. Initially it was just a COVID exclusion. Again, some of them are adding the communicable disease exclusion on there. So going forward, there would not be any kind of coverage for any claims arising from that, either from downtime, from cast losses, or on the liability side, if a production company was to be alleged to have not followed proper precautions in protecting their crew or any of their cast. Now, again, this is all new and been changing, and we'll probably see some further changes as the months go on. I don't see any relaxing of those exclusions in the next little while. When we had SARS, there were exclusions put on a policy that lasted for a few years. But again, this is a big worldwide occurrence, and the insurance companies, on the film side and so many other sides, theater side, and other businesses are looking to pay out claims. So I imagine that that exclusion will hang on a lot longer than the one for SARS did. As far as pricing, I anticipate that there's going to be, changes in pricing based on the insurance companies, having to pay out so many claims, and we'll be operating with a lot of losses. So, unfortunately, in that scenario, the premiums will have to change for, all businesses, be it production, manufacturing, anything. So I anticipate that we're going to see some changes in pricing going forward, unfortunately.
Okay, good answer there. So yeah, we probably do have time for maybe one more question if somebody wants to get in final question there. But otherwise, we are pretty much at the end of the webinar now. So if you have any additional questions, feedback, or if we didn't have time to fully answer everything here, you can feel free to email. The Toronto office is listed there. The email address is on the slide there. You can send us questions that you may have. And also consider following Front Row Insurance on Facebook and/or Twitter. And we do keep those channels regularly updated with new information. And so thanks to of course, Damian and Diane for an informative presentation, and of course, thanks to Cynthia Lynch and Film Ontario for partnering with us on today's webinar. The webinar has been recorded, and a YouTube link to the recording will be made available on Front Row's YouTube channel soon. And assuming that the feedback on this webinar is positive, we plan to do more webinars in partnership with Film Ontario in the future, so be on the lookout for those. So thanks for listening, everyone. Stay healthy and have a good day. Goodbye.